MicroStrategy announcing Monday it's preparing to buy up to $488 million in Bitcoin with the proceeds of a $500 million bond sale it just completed. A lot of newcomers to the space always ask, is now the right time to buy?
It's always the right time to buy. We have a long-term view on this. I think that this is the decade of Bitcoin. Last decade was the first decade of Bitcoin and reached multi-$100 billion by March of 2020. But I think the pandemic catalyzed the next phase of growth and caused it to mature and come to the attention of institutional investors. And so I think the coming decade is the decade when institutions, corporations, governments, and the like begin to adopt Bitcoin as a digital asset. When we did the bond financing, we agreed that we would pledge the Bitcoin that we purchased as part of the debt proceeds as collateral against the loan. But we had 92,000 other Bitcoin, and there was no reason for us to collateralize the $500 million financing with billions of dollars of additional Bitcoin. So we kept that out of the collateral package. We moved it into its own separate subsidiary because that increases our flexibility over time. If you have the charter and the ability to buy Bitcoin, you could buy naked Bitcoin and you get all the volatility of Bitcoin. If you have an investment fund and your charter is to invest in publicly traded equities, you can't buy Bitcoin, nor can you buy convertible debt, nor can you buy debt. And so if you were to buy MicroStrategy, you would be buying a company that's a blend of an operating software company with a leveraged Bitcoin position. That would be different than buying an ETF because an ETF wouldn't have an operating business to sweep cash flows into Bitcoin, and it wouldn't be a leveraged Bitcoin position, and you couldn't do the sort of things we've done, like issue debt for 0% coupon. I mean, you can't do that with an ETF. If you have a convert fund, you could buy convertible bonds, but you couldn't buy equity, and you can't buy Bitcoin, and you can't buy senior debt. And if you have a corporate debt fund, you can't buy converts, you can't buy equity, and you can't buy Bitcoin. So the world consists of different investors. They have different charters. They have different limited partners. There are certain things they can do. If you want Bitcoin exposure, you might choose any of those as a rational decision. It depends upon your strategy and your charter. 6 months ago, there was no inflation in sight, and we speculated that it might get to 2%, and when it did, the Fed would do something. Then they changed the expectation to they would do nothing until it got over 2% for a long period of time. And the last month, I think it's now 5%. And so we found inflation by CPI standards. And so institutions have reason to be concerned about inflation. Between that and the commodity inflation, which is rampant, I think Paul Tudor Jones' message is a good one for Bitcoin. He's saying that he's upping his allocation from 1 or 2% to 5%. That's great. I think it signals that institutional adoption is coming. I think it's only rational to look for a monetary inflation hedge at this point.
Interesting. We also hear from Elon Musk saying that Tesla will resume accepting payments in Bitcoin if Bitcoin mining reaches about 50% in renewable energy. A lot of Bitcoin maximalists just want Elon to go away, but you have his ear. You began the Bitcoin Mining Council with Elon's participation. What is your perspective?
I thought it was awesome news because what he was saying was, first of all, he hasn't sold any additional Bitcoin. He confirmed that they'd only sold the publicly disclosed amount. I thought that was bullish. He also indicated that there are circumstances under which he would continue to accumulate or continue accumulating Bitcoin. I thought that was really a good message. I thought it was a message of support for Bitcoin. And I think if you combine it with the latest China news, the hash rate on the network is down to 138 exahash, and there was a minus 5% difficulty adjustment down last period, and there's a targeted minus 4.9% difficulty adjustment coming. I think the implication is a lot of China hash rate that's running on dirty coal is being turned off and decommissioned. So there's a surge in the energy mix toward renewables just in the past 2 weeks. And I think that once we sort out what that means, we'll conclude that The network is migrating to the US. The network is decentralizing further. The difficulty rate has dropped, and that's great news for every existing Bitcoin miner outside of China. And for anybody that wanted to see Bitcoin become more sustainable and more carbon neutral, we just saw 30 exahash, which is 20% of the network, which presumably was the coal burning 20% of the network in China, come off the grid. And so there's really, really interesting and positive developments here, I think, for everybody in the Bitcoin. People are very charged up about what's going on in El Salvador. That was a big highlight. I think the developments in Nigeria and Tanzania are highlights. I think that the news this weekend out of Lebanon, that Lebanese have lost 90% of the value of their local currency, and their dollar amounts or dollar balances are frozen by the banking system. I think that punctuates just how important Bitcoin is to the entire world. And I think you could feel that passion in Miami. Everybody feels like this is the idea whose time has come, and we have an opportunity to spread property rights and human rights to 8 billion people around the world. What's clear is lots and lots of nations around the world are struggling, and they need some kind of reserve asset like Bitcoin. The United States dollar is spreading everywhere, and El Salvador lost their own currency after the last civil war, and they were using the US dollar as their medium of exchange. But they need a store of value, and they also need a way to move billions of dollars cross-border without paying exorbitant remittance fees. And so I think what we can see in El Salvador is the future model of the 21st century digital economy. And that would be billions of people with a digital wallet on a mobile device. And one of the things in the wallet is going to be a digital currency like the US dollar, probably running on a stable coin. And the other thing that's going to be in the wallet is a digital asset like Bitcoin. Bitcoin gives everybody in the world, and especially in El Salvador, the ability to save their money in an asset that's going to appreciate in value over time. And it's also providing a worldwide settlement and synchronization network that allows anybody in the world to plug their website, their mobile application, their bank into the global monetary network, and they're not forced to pay a 10% fee to move money back and forth or to wait days or weeks. And so El Salvador is the model, and the enthusiasm and excitement here is because there are billion people, 1.7 billion people that are unbanked. They need the same thing. An Android phone that costs $50, a bank in their pocket, and assets that go up in value.
I wonder what you think will happen to the US dollar in the future amid this digital economic shift.
I think the US dollar is going to spread to 5 billion people. I think that this decade is going to see the explosion of the US dollar as the reserve currency of the world. It'll be the digital currency that'll be on every iPhone and every Android phone in every country in Africa and Asia and South America. And it'll move on Bitcoin rails. The Bitcoin Open Monetary Protocol is what allows the US dollar to spread to billions of people. In an inflationary environment, money breaks down into two forms. There's a medium of exchange, we'll call it the currency, and that'll be controlled by governments, and the US currency is going to be the most powerful one. And then you need a store of value, and that's an asset, and Bitcoin is the most powerful store of value on Earth.